Known as one of the most successful investors of all time, Warren Buffett now runs Berkshire Hathaway, which owns more than 50 companies, including Duracell, Geico, and Dairy Queen. He has extraordinary business acumen and has been through so much that he is a treasure trove of lessons and principles. If you also want to succeed in investing, he is one person that you should listen to. In this video, we will discuss the investing principles and rules that made Buffett a success. Let's get to know behind the investment icon. Warren Buffett was born on August 30th of 1930 in Omaha, Nebraska. His father was a stockbroker and his mother was a homemaker. He was the only boy in the family and the second of 3 children. Even in his childhood, he already demonstrated a propensity for business and financial matters. Friends of the family said that he was a mathematical prodigy who could make calculations of large columns of numbers in his head. This is a talent that he would sometimes demonstrate in his later years. As a child, he would often visit his father at his brokerage shop. He would make his first investment at 11, which was 3 shares of Cities Service Preferred. He paid a total of $114 for all 3 shares. The stock dropped to $27, but he held on to it until it reached $40. He sold his shares at a small profit. However, he regretted his decision when its value shot up to as much as $200. He later took it as a lesson in patience when it comes to investing. Today, he has a net worth of at least $84 billion. The CEO of Berkshire Hathaway has a lot of money to spend. He has promised to donate a lot of his wealth, and so far, he has given more than $40 billion of his money to various causes, the majority of which go to the Gates Foundation, as well as the foundation of his children. He launched the Giving Pledge in 2010 with good friend Bill Gates. They asked other billionaires to commit to giving at least 50% of the wealth they amassed to several causes. One of the most important lessons Buffett imparted is that communication is key. Although he has a talent for picking the right stocks, it has little to do with the affluence he has set for himself. He wants to tell everyone who wants to follow in his footsteps that communication is a very important skill that must be learned. He once told a Stanford MBA student that you can't convey your message to your recipients if you can't articulate, and you won't be able to convince them to follow suit. Although he might have said this about people who want to seek a career in finance, it's a lesson that applies to everyone. Communication skills are needed for people who wish to become leaders, as well as the ability to think in stressful situations. Another lesson is to invest in only what you know. Getting yourself involved in complex investments is the best way to go if you want to lose your money. Most of us spend our entire lives working only a few industries. We have a good idea of the industries and often know how these markets work. However, a lot of companies that are publicly traded are those we have little to no direct experience in. Buffett once said that you should never invest in something you don't understand, and that is still true today. Complex issues that are beyond our grasp will have a great effect on the earnings we make. When you come across these types of businesses, you should be ready to say, pass. There are other stock options out there, so don't waste your time studying a company or an industry that is far too difficult. Unsurprisingly, he also says that you have to be frugal. Buffett is known to live not within but below his means. Even though he has the millions to afford pretty much anything he wants, he has been seen driving an older car. He also still lives in the same house that he bought in Omaha, Nebraska in 1958. For breakfast, he still drives through McDonald's. To Buffett, wealth should be thought of as security. It shouldn't be seen as a license to spend money on whatever you want, whenever you want to. The financial market isn't always sunny, and the odds aren't always in your favor. When you live frugally, you'll be able to survive no matter what the problems the financial market might run into. People who invest to fund a lavish lifestyle will soon find themselves making decisions that are based on greed. We can heed the financial master's advice by looking for ways to stretch our dollars. We need to ensure that we get the worth of every penny we spend. You can start by eliminating whatever debt you may have by taking advantage of low-debt consolidation loans. According to Buffett, it's also important to be teachable and to be willing to learn new things. He's been known to say that just like interest in the bank, knowledge also accumulates. This is why he prefers to begin each day by reading a newspaper. He also reads books on various topics daily. When you consume information, you'll have the latest information, which can greatly help your investment investment endeavors. It will also prepare you for the success in other areas of life, not just financially. Be like a sponge, ready to soak up knowledge whenever it presents itself. People who avoid learning new things run the risk of becoming obsolete. When you are open to being taught and learning new things, you won't be like old dogs that can't learn new tricks. Know when to walk away. Sometimes walking away or giving up doesn't mean that you lose. In the long run, it could turn out to be a major win. Buffett attests that the trick for long-term investing is knowing when to walk away. He may be very successful, but what most people don't see are his many clunkers. He learned this important lesson when he was just a young man betting on horse races. He increased his bets to make up for all the money he lost. But what happened was he lost more money. It's vital to know when a stock is a loser, so you can walk away from it and cut your losses early. There are plenty of automated investment services today which make automatic adjustments to your portfolio, so if you want to invest, you might want to look into them. No matter what happens, don't invest borrowed money. Always use your own money when investing, because investing is a risk. You don't always make profits. At times, you also lose large amounts of money, and it isn't a sound idea to risk what you have and what you need for something that you don't. If you borrow money so you can invest, you will end up with strategies that are tied to your need to repay your debt. Remember that investments aren't always short-term. Some of them require a long-term commitment. It's difficult to carefully plan the future when you have an immediate need to make payments. Don't just follow the herd when investing. One thing you need to discard when you're investing is herd mentality. You have to be prepared to break out from the pack, and you need to be brave enough to develop your investment strategies. You must divorce yourself from your fears and be receptive to advice from people who have been there and done that. Sound advice can help you plan well and guide you toward retirement with no worries. Sometimes it's hard to do, but you must always look forward. During the 1950s, Buffett was famously quoted to say that today's investor doesn't profit from yesterday's growth. Although it may have been decades since he said that, it still rings true today. Past trends don't have as much importance as identifying the many new opportunities that are available now. When you invest in a company, you should focus on its future and not its history. When you invest, you think long-term. When you invest in stocks, you should be prepared to stick to your stock even when it's not having such a good month. Many experts have called this strategy buy and hold and hold. He once remarked that his favorite holding period is forever. Stocks might stumble occasionally and may not always perform the way you want them to, but you can take it as an opportunity to buy more shares at discounted prices. Buffett has famously held his positions not just for years, but for decades. Why does he do that? Because it's a challenge to find an excellent business that continues to have a promising long-term future. Moreover, businesses that have high quality earn high returns, and their value increases over time. It takes years for fundamentals to impact the price of a stock, and rewards are only for patient investors. Anything is possible in the stock market. Buffett is known to have walls plastered with newspaper cutouts with reports of stock market crashes. He does this to remind himself that anything can happen in the stock market. So, you need to be cautious and make informed decisions regarding your investments. When you keep this advice in mind, you will avoid living an unnecessarily lavish lifestyle, prevent incurring risky debt, and be able to weather market fluctuations. You'll be doing exactly what Warren Buffett did. Lastly, you need to think that dividends are the key to long-term growth. If there's one thing that Warren Buffett loves, it's stocks that pay dividends. Berkshire Hathaway, one of his companies, earns hundreds of millions of dollars per year from Coca-Cola in the form of dividends. Companies that consistently meet or exceed their goals have dividends. You may not quickly make money with their stocks, but their dividends can put you in investing autopilot. Other companies similar to Coca-Cola are Verizon, Caterpillar, and AT&T. Did you learn anything from the lessons the great Warren Buffett has imparted? Hopefully, all these lessons will guide you in investing and also help you make a ton of money. We've come to the end of our video. We'll see you again next time.